Hi everyone, thanks for tuning in. Given the importance of yesterday's market action, I thought I would do a quick 1 or 2 minute video to kind of explain a little bit more of what happened yesterday. So I'm going to be focusing over here on one of my screens to look at the charts as I talk to you. So first of all, the S&P 500, as you can see in the article that I wrote, of course, had a significant drop yesterday, getting us right back into a consolidation range. That was basically the move through March. We closed the day around 1552. I do think we're immediate term oversold. In other words, we probably could get a 1% or so bounce. Shouldn't take us much longer and much higher though than potentially the high 1560s, maybe low 1570s, something like that. We'll have to measure that as it goes. Key support certainly remains still at about 1538, as I've been talking about for the past couple of weeks as I was covering for Sam Collins. 1538 is lateral support, in other words, horizontal support, which dates back to at one point early in April and then in mid-March. If we break below that, we also certainly have broken the uptrend dating back to the November lows, and that would pretty much confirm what we're seeing everywhere else. So if you look at the Russell 2000, for example, I'm just looking at the IWM on one of my screens here, and this trend is definitely broken. I don't even know if I put up a chart on it in today's morning in today's article. I think no, I did. So if you look at the chart in the article, you can see we retested the breakdown that happened just a few days ago, actually a couple of weeks ago in early April. We're now at a point where if we break this sort of neckline that comes in right at yesterday's low, we probably can move quite a bit lower. I think about 86 on the IWM, about 860 on the Russell 2000 is a pretty good level to target. That's as far as equities goes. We're weak across the board. Again, we're likely oversold in the immediate term. Let's take a quick look at gold. If you look at gold and silver, there's, as I discussed in the article, not a whole lot to talk about really, other than just broken trends all over the place, and both of them have lower to go. There's no real support here for another at least 4 or 5+% on them. If you're playing into the long side of gold or silver, you're essentially gambling, because we need some sort of stabilization before there can be a balance that's actually tradable, and that's more than just a pure gamble. So that's my take there. In terms of individual stocks, I didn't really talk about any in the article today, but a lot of tech stocks are coming out today and this week actually. So I probably would stay away from the tech sectors, the Googles and these things. I'll probably stay away. Apple, however, yesterday actually closed below 420, more or less right where it should have at 419 and change. So pretty interesting spot. If we get below there, it's got a lot further to go. And when I say a lot, it's about 390 to 400 is the area on Apple. That would probably be interesting for a target and then the potential cover if you short. So I hope this makes sense. Have a great trading day. Take care.